right, welcome to the final countdown. No, welcome to another live stream, Exit Liquidity Live. How you guys doing? Let us know in the comments. Hey Dex, how's it going?
Hi, Dex.
Bacon, how are you doing, my man?
I'm doing all right. How are you?
I'm doing good. I'm just gonna pour one out for somebody. No. I'm doing good. It's been a bit busy, but kind of getting back into the normal swing of things. And yeah, it's going pretty good. Work's gonna be picking up here soon, so I'm just kind of bracing for it. It's already started picking up. So I worked last night, worked today, and then went through a windstorm and had a tree fall down. So it's been it's been a wild day. That's for sure. And now I'm going on some Safeway Signature Select Seltzer. So
alrighty.
the
I
good
have
stuff.
Earl Grey green or Earl Grey tea.
That's
just
good stuff.
Yeah.
Have you ever had like the what is it? I think I do Earl Grey with like I don't know, like with like some milk and then like espresso shots.
It's
Is
weird.
it
I haven't
chai tea maybe?
like
I
when
don't
it comes to coffee, I like some cream, but when it comes to tea, like generally speaking, no cream for me with tea. It's a weird thing, but
No go on the cream.
yeah,
No
yeah, yeah,
go on the cream.
That is hilarious because I remember I'm very well aware that Paul has attached some like obscenely low share price for Nvidia.
Yeah. No, 50's too high, man. It should be $5. Nvidia is just putting the nail in coffin every time Paul said Nvidia is worth $50. And to go along with that, I had something prepared because I knew you
Yes.
guys would be, talking about it, because I was like, oh, you know what? Hey, it did break all-time high and it looks like it is gonna run more. I don't have a position in Nvidia. I don't care. But sweet revenge. I mean, I guess, people get what's coming. But so this is going to be
In his case, it's his own stupidity. Like, good
this is going to
lord.
be the running joke for the foreseeable future. We will start off the live streams of Exit Liquidity with Paul's short position. And I might even create a Google Doc just to show his like actual losses. But yeah, so the December 25 300 calls that we kind of speculated that's probably the position he took according to the timeline when he took it. He probably was in these for about, anywhere from like 70, 80, maybe 100 at the best for the premium gathering. Yeah, as Bacon would say, it's not looking good, Bob.
Not great, Bob.
Not great, Bob.
Not great.
So yeah, so I mean there's a pretty big spread there. I think after today's move, after the stock making all-time highs, under those assumptions that we had previously, or that I had previously in that video, he would definitely be down north of 5 million right now. So I mean that's a bit, man. 5 mil pocket change for them though, right?
Allegedly, even though one getting their family office margin called raises some interesting questions. That's what I got.
Yeah. Just ouch.
Like
Ouch.
a margin call in theory should not be the end of the world, but like for a lot of people, it's not something you want to have happen usually.
I mean, in general, I don't think you want to get margin called. I think that's how investing works. Like, don't lose money and don't lose all your money.
Yes.
So, yeah, I don't know, man. I mean, like, hopefully he like got out of the position or something. I feel like he didn't. I mean, he's even said like he's going down with the ship, and I'm like, yeah, you are going down with the ship, man.
He's gonna
You're
do
going
this
down with the ship
until like he has another harebrained idea to be perma bear like on something. Like he's got this. He's got a recorded history Like ever since his Seeking Alpha days with Capitalist Manifesto, like that account, it's pretty well documented. Yeah.
Perma bear, perma bear, which they'll be right once in their life, but that's about it. Yeah, I don't know. I think for him, just stay in the family business. I think they do like rentals or like real estate or something like that. Like
Bulk of it's real estate. They've got some other stuff like they have a sports fantasy football sports app. They have like a limousine rental company, some other stuff going on. But yeah, Crossroads Group.
And then they have the best investor since Warren Buffett with his short positions, Paul Gabriel. So, I mean, like, it's scary, man. Scary just watching somebody do something so risky to annihilate their wealth, and then the platform that they're doing it on, with having what are they like 200,000 subscribers now? How many subs are they? They're pretty big, aren't they?
Probably. Let me take a look.
Yeah, but with the reach that they have, man, and just kind of, I don't know, man. That's just that's rough.
217K.
Yeah. Did you notice that on his little screenshot of like I don't know his like gains and losers? Was Nvidia on there? Was Nvidia on there?
Of course it wasn't. Of course.
Oh, I wonder why.
Yeah,
I wonder why. Because he's technically down more than 100%.
Oh, like let's not forget Ebix. Like you mentioned that one in the past. He's out of all the cruise companies, like I if he stuck through it, I imagine he's technically made some money off of Carnival Cruise Line. But you compare the other publicly traded cruise companies, he picked either the worst one or certainly like really close to it, because Norwegian's done like far better. Last I saw, I want to say.
Yeah.
Like it's just like because again, his methodology, you got to trust his process, and okay, alrighty, because they all got punched in the face badly.
And the funny thing is that even his like biggest winner, like he stumbled into, right? His puts, his sold puts got exercised, right? So he just like kind of stumbled into the position. Yep. But you know what? Hey, we'll see what happens. Nvidia to 1,000. That's what I'm going for. I'm just rooting it on at this point, man. I'm just rooting it on because, like, you know what? Just have a day, Nvidia. Just go hit that $1,000 mark and make our year, and teach everybody on the internet a lesson about how you can lose potentially tens of millions of dollars on a stupid short position. Dan, what's up, man?
I've survived a kid's birthday party, so
hey, good job. And you didn't get margin called either.
Congratulations. Happy kid's birthday party.
That's part one. There's another one.
Oh, there's another one?
Uh-oh.
You have one for friends and one's for family.
Yep. That is true.
Yeah.
That is true. Is the next one going to be better or worse?
I guess we'll see how many kids show up. You have no idea. You just invite 25 kids and you hope half show up.
And then 50 show up.
While you spend hundreds of dollars on something like that. Oh, whoa. Were you talking about Paul?
Yeah.
Oh, yeah.
Video short.
I was telling everybody this is going to be the new meme. The intro to all of our live streams is going to start with this screen. And this is the December 25 Nvidia 300 calls that he sold. So, FYI, the starting screen of all of our live streams for Exit Liquidity is going to be the epitome of an example of how not to invest.
I want to make an intro. I have all the clips of him talking about ruining his family. So I got to kind of put it in a good 20-second like loop.
Oh, man.
Talking about, I am shorting. My brother hates me. I don't give a fuck. I'm going down with the ship. There we go.
Dude, it's
the end will have to be him crying at some point. Like,
I mean, honestly, it's kind of pretty sad. Like, I don't know.
For everyone else,
It's
yes,
just-
I would say so. If it was just Paul himself,
Well, like we said a month ago, right? I think we did this a month ago. He could have got out of it by now.
Yep.
He can get out of it at any time. He can either buy the contracts to close it, or he can buy the shares to ride it out. I mean,
yeah,
he doesn't have to go down with the ship. Is the hilarious part.
Hopefully, I don't know. Hopefully, he's done something to, I don't know, cover it, because yeah, man, he's just at this point, like, he's probably down well over 5 million now, probably 5-6 or so. If he is in those 300 calls at a $80 to $100 premium.
And there's no other company that does what Nvidia does, right? I mean, to say like it's overvalued, what does it matter?
Not yet.
It's it. Yeah.
Well, they have a lead for a while. I think they're gonna have a lead, and I think they're eventually gonna when the cycle does end, it's probably gonna end because these larger players are actually creating their own chipsets, their own ASICs that are specifically for their compute needs, and they're going to end up bypassing Nvidia. I think so. I think that's where the real, I mean, if you want to say like short opportunity, that's where it would really lie, because this initial super cycle, it is a super cycle, and it's eventually going to end. It's a very cyclical industry. The pullback will be brutal. We just don't know when it's going to be. It could be 4 years. We don't know. Like, you have no idea. So yeah, pretty dumb. Pretty dumb. And I think I said even in my video, I was like, oh, look, it's like retesting highs. It looks like it might break out here soon. And then the last couple of days.
I think it was yesterday. Someone sent it to me. It was like $20 up, and it's like $20 up again today. Isn't it?
Just keeps on going, man. So
it's like blowing the brains of value investors out of the water, because they can't understand, because if you put it in your value spreadsheet and it doesn't make sense, and they can't take it. Like,
yeah, no, I
Paul
know.
put it in his software and he was like, it's worth $40 a share. I don't get it. It's like,
based on the historical numbers.
Like, I mean, I reckon not every company in the world is the same. Like, there are unicorn companies in the world, like,
yep,
that defy everything. They defy all the odds. Like, they have pricing power. They have almost like, but there's only a few of these. That's what makes them so rare and valuable, that people would pay this much for it.
The momentum that could come with this, right? For a while, not only just business and fundamental momentum, and like improving their fundamentals, but like the stock price momentum that could come with this could last a while. I mean, it is like they're $1.3 trillion market cap now, which is nuts. But yeah, I wouldn't be surprised to see this above $2 trillion market cap. I really wouldn't. Like, nothing would. There's crazier things that have happened, right?
Yeah.
If GameStop can moon, like this can run.
Could you? What do you give the percentage of it hitting 1,000 at some point this year?
Ooh,
man, if you had to take odds.
Odds?
Just touch it. It doesn't have to stay.
Just to get there.
I mean, we're talking about doubling from here, so
that's really hard. I would honestly say maybe 15-20%. For a double from here, because that's like 2.2 trillion market cap, 2.5 trillion market cap, right? That's rich, man. Especially coming off of a basically a year and a quarter of nothing but up. It could, like, I wouldn't be surprised at all, but I wouldn't give it like majority odds. You know what I mean? Like maybe 20, 25%, something like that. I think it could definitely get to, like 700, 800, something like that.
Seeing estimates
I just don't know
alpha, it's like 400% year on year, 350, 90.
Yeah.
It's like, holy shit.
Like, this is one of those that if you really understood the industry and like, which sucks because like, man, it was right in front of us, especially when we were looking into adjacent areas. It was right in front of us. But this was one that like, if you really understood the industry and like did the opposite of Paul, essentially, right? You know, took some like well-defined risk calls or something like that when it was really being down in the low hundreds. Like you could have been set for life. Like, oh my gosh,
What
insane.
percentage of SCHG is it? This is 6% of SCHG right now.
Yep,
So,
sounds about right.
damn.
Yep. Yeah.
Because it's
good.
around that much of the Qs too, right? Where the Qs at?
You're
Index
not
breakdown.
you're not gaining all of it, of course, compared to the picker, but like if you're properly indexed, you shouldn't be crying.
Yeah. Well, maybe it's only about 4% of the Qs right now, but yeah, I mean, it's got room. It's got room to run. So we shall see what happens. Let's see. But the other news today was so it's funny that this happens as I'm doing a cybersecurity themed run. But so the SEC on Twitter announced that the crypto ETFs had been approved. and let's go to Bitcoin price.
Oh, do you have it? I want to see it. I didn't actually see the tweet. I got the news pop. I got.
Yep.
Oh man. Oh, where was it?
Because I was the first one to announce it. I'm like, oh, game, it's on now, and
yeah, I remember.
Man, I had the pop here before. Maybe it went away. CLSK.
I was like getting ready to leave work, and it's like it popped up on my feed. I'm like, oh
Yep.
shit.
Yeah. So that tweet goes out. You can see so Bitcoin like ran pretty hard. CLSK even like pumped
Yep.
up after hours.
It's all priced in, Jesse. What are you talking about?
Yeah, no, it's all priced in.
Efficient as a
right?
mother effer. It's all priced in.
So we saw this nice pump after hours, after that tweet went out. And then 12 minutes later, the SEC was like, whoa, timeout. Somebody got access to our account. That's not true.
Oh God.
The hilarious thing though is if you actually look at the tweet itself, that didn't really look like something that the SEC would really say. It was just Bitcoin ETF approved. Okay, which one? Because I believe there are bare minimum 5. I want to say 10 that are currently going through the process with S1s or S3s. And the big one that if we want to get nitty gritty, it's the spot ETFs that a lot of people are foaming at the mouth for, I think. But yeah, it's internet finance.
Good old
space.
internet finance.
Oh, okay. I see it now.
Yeah, Gensler.
Yeah, I'm pretty sure the SEC wouldn't use the Bitcoin logo in the announcement.
Yeah.
That's not something government does.
No. Generally speaking, no.
No. Plus hashtagging Bitcoin.
Yes. That to me, I mean, granted, I only saw it after the fact, but just knee jerk, if you blindfolded me and were like, hey, this is SEC news, I'd be like, really? This is?
I'd imagine that's not how we find out. I would imagine it would be an official.
It's gonna be like a filing
statement,
or something,
a memorandum or something.
Yeah.
I mean, if this was how it was worded, that is more official than I thought. So a short statement appeared above thumbnail of Mr. Gensler. Today, the SEC grants approval for Bitcoin ETFs for listing on all registers. Blah 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 blah. So I mean, it does sound like, I don't know. It wasn't like an Elon Musk tweet.
I
thought it was going to be like maybe because they were still waiting for some court proceedings to go through.
Yeah.
Is the latest I'm aware of for this. So
yeah, because like given the fact that whoever is SEC, like they probably would be aware that there's multiple, attempts for a Bitcoin ETF or a crypto ETF, and like they would probably be relatively specific to mark the momentous and historic occasion, is my guess. But I don't know.
Man, I really, really want to think about buying some Robinhood. I'm telling you. I'm thinking about it hard.
Thanks, Vlad.
Why?
It's sentiment trade.
Yeah.
I mean, it would have to be.
Don't look at it in a spreadsheet. Put it away.
Yeah. Oh my god.
Hey, I think it'll just, when they announce this, because I'm not gonna buy Bitcoin.
It'll moon.
That's off the table. But I don't know.
Yeah, this is a new year. Dan has fresh slate of sentiment trades to make.
It did get a little bit of a pump after hours.
Yep.
But oh man, I can't.
I was talking to Prop Notes guy about Robinhood too a little bit, back and forth. So he really likes Robinhood, which I don't.
You're gonna have to create a channel that's day trading with Dan.
You know what? Like seriously, he would do it if I asked him. I think. But
day trading with Dan.
I don't have time for that's a problem. Like I was busy all day today. Like I
Oh no! Did we lose Dan?
Oh, whoops! My bad.
Oh no!
My bad. I took you out, Dan. I was like, enough of this hood crap, and I removed you from my stage.
This is why I can't be a day trade, because like I was doing like this audit. We got to get all our audits done by the end of the month. So I'm reviewing shit all day. I don't want to get into something like this yet, but
there's something nice about just being able to buy solid companies and not really have to pay too much attention to them.
Or Jesse, you can short Carvana.
Yeah, I could short Carvana.
You like that? I told you guys at 60. I told you I was going to do it. And then I was like, oh, maybe I'll clean the books at the end of the year. And I'm like, I'm not leaving.
Dude, we're not leaving. You're like, I did it. And then like 2 hours later, it was down 20% or something like that. I was like, what the?
I was so close to pulling the trigger to say, you know
what just happened?
I'm like, $8 down isn't bad. And I'm like, no, you know what? Fuck it.
Yeah,
company's such trash. It's such, I can't even begin to understand its valuation, but it makes no sense. Like,
I know
they can't control the price of the products because they have to buy used cars on the open market at wholesalers like Copart. They have no, like, they can't control the costs of their own products. Like, they have to buy cars at the market rate. So it's just hilarious. And then a lot of it's just out of their hands. So
yeah. Why would they do? I wonder if instead of buying and then selling, if you could set up some type of consignment structure where you basically get the vehicle, you're in charge of the vehicle, and you have it set up to where basically you have no immediate price overhead, but then you take a commission of the sale.
Oh, you mean like they don't actually take ownership until it's sold?
No, yeah, they wouldn't take ownership of the asset, right? Like they would essentially.
You know what? That's kind of like how recreational vehicles are sold. Like motorcycles and boats.
So
they don't actually
sign it over.
Yeah,
you can sign it over, and then they would take maybe like a 5 or 10% fee upon the sale.
I mean, that would be a better model for these used car companies.
Yeah,
so much better.
You've heard it here first, people. Heard it here first.
Where they have a fee structure that they're not, because that's the flaw of these companies. They're holding cars that they have to buy on the open market, and they have to pay whatever the going rate is to keep inventory. They can't debate, if CRVs are going for more money than they're comfortable, too damn bad. They have to buy them, and then what are they going to flip around and charge you more money? You're only going to pay the market rate because you can just go to anywhere else to buy a car. So they have no controls over the pricing of anything.
Yeah.
I mean, they could race to the bottom. I don't think it's a race to the bottom type business, but it's just
Well,
a
I mean,
lack of control business. Like
they got super lucky to essentially have inventory and then go through a supply chain crunch, a production crunch, be able to sell all of that for, you know, way freaking higher than they bought it for.
Yeah.
But unfortunately, at the same time, they were still purchasing vehicles at stupid like prices. Right?
They were paying stupid prices for vehicles at the same time interest rates were like up and up and up. And I'm like, this is going to be bad. Like they can't be the same. Like, you know, car prices are going up, but they can't like discount because they already paid too much in the first place. And
watch them be like, we're gonna sell scooters from now on. Never mind.
Scooter Vana.
Scooter Vana.
Yeah.
Scooter Vana. Oh man. No, it's funny. It's funny, man. So this thing was at like what, $6-7 too. And it went up to 60.
Yeah.
Absolutely nuts. Crazy.
That is what we call a pain trade, where you
but
need
still,
to
whoever they got to restructure their debt, like that dude needs to go work for Warner Brothers. He needs to help them because he had them write off like debt and restructure it.
Yeah.
And that was part of the reason they did so well last year.
Yeah.
I don't know who did that for them, but
yeah. I mean, so what's it been? What has the market done? We got to do the year to date, guys. What's the year to date?
But it's a new year. There's like minimal.
No, but that's the point.
Okay,
we have to do the year to date. It doesn't matter.
That's fair.
We are positive 0.36% year to date.
Yes.
Oh my gosh.
Everybody panic. Everybody celebrate.
And the peasants rejoiced. But if you look at Nvidia, Nvidia is up 7.9% year to date, which means Paul is down 47% year to date.
I swear, if it actually does work out in his favor, like, and he does make some money off of his short, like he's not even going to mention the concept of economic costs or opportunity costs. Rather, he's not.
You know what?
There's no way he is.
You know what? If it works out for him, good for him.
Yeah.
The problem is if
lucky for
Nvidia
him.
starts tanking, whoever has those contracts can just exercise them immediately at any point.
Yes.
So to say, oh, he's got till December 25 for it to get cut in half. It's like, well, that's not true. At any day, whoever's got those contracts can just call their broker. Boom.
Yeah.
My friend just did it with his AMD contracts. So
yeah.
But what about Crocs, Bacon?
Oh,
you're the Crocs man.
No, I'm not. That's person who I was gonna say we all know him off screen. I don't know how comfortable he is with me throwing his name out there, but yeah. I've been on record. I wasn't the smart person to find it, but I like what happened. It's been drifting down like tail end of December, partly because Nike had pessimistic guidance. If you've looked at Crocs, and whenever Nike has had pessimistic guidance, Crocs stock prices really got punched in the face along with it. But this time though, like Crocs management team says, did good. We're guiding revenue growth for the core line of Crocs, which is fine. Like stock prices jumped back up some. We'll see how it goes. Too early to say if it's good or not. Because again, my thought is longer term. So
no. Did they have earnings, or was this just a guidance release?
Not earnings, just guidance release. Really.
Okay.
Yeah. Like they guided pretty strong. Like I forgot the exact percentage, but it's very nice top line guidance to see.
Nice.
Oh yeah.
Cool. Well, you know what? I love me some Crocs, so I'm all about that. All about that. Yeah. I mean, like, go find me a shoemaker that has like freaking 50% net margins or something like that.
Yeah,
It's absolutely insane.
they
Yeah, 50% gross.
it was yeah.
And
It's a nice thing to have going forward. At least so far.
they
We'll
have
see.
better bottom line margins than most cybersecurity companies.
I know that's the thing that like floors me is like and we'll see how it goes going forward because they still anticipate to have great gross margins even and growing revenue, but they are looking at Hey Dude as far as like being better with their distribution and improving those in the face of headwinds. So like
Yeah.
I'm not expecting crazy bottom line, but gross and operating. If operating takes a bit of a hit, but gross still stays the same, I think that the core would be all right.
Yeah. Yeah.
Like longer term.
It's really going to be interesting to watch this play out because really, I mean, it's just going to come down to are they really going to be a fad, right? Because if they keep this up, like even if they don't grow, right?
Yeah. Like
if they don't even grow and they keep up this type of profitability,
Yeah.
over like 5 years, like they're going to be able to absolutely demolish their share count after they get that debt paid down. So
yeah.
yeah, it'll be interesting to watch. And yeah, it's just going to come down to, is this Ruru revenue a fad or not?
I didn't pencil that in. I did not pencil like crazy top line growth like that.
No.
So
No.
like
Well,
my
and
longer term.
the market definitely isn't pricing it for that. I think the
Yeah.
market right now is pricing it for a pretty big contraction in their core business and a pretty big decrease in income. So,
Yeah.
see, is the market right? That's the question. To be determined 5 years later.
It could be, and fairness to the market, like when it comes to macro conditions, it could be such where like there are serious headwinds for it. Because you look at this and like just about every like fashion or like consumer discretionary company out there, like they've all been pressed down like a fair amount recently. So it's it's fine. Like I'm aware of that macro can easily blast me in a bad way.
Yeah.
Yeah, this is what happens when you go try to be macro agnostic with picks.
Yeah, I think I don't know, man. Playing the macro is kind of hard.
It is.
At least I think it's hard.
It is.
Because I feel like it's like, the macro is just really gonna be a huge headwind or tailwind, but you like if you're wrong on the macro and you're like, I don't know, let's say you're out because you think macro is going to be bad and you're wrong about that.
Mhm.
Like you're just sitting idle while the market's going to be performing pretty good. And yeah, there's risk in like I would say not having adequate exposure at times, just from your capital kind of being deteriorated from inflation and whatnot. So you got to find that balance for sure. But I don't know. I think man, if we don't see Crocs weaken in 2024, like if they show to remain fairly strong, I feel like the market's not really expecting that. But at the same time, I think the market's kind of disciplining them for their Hey Dude acquisition still.
Yeah.
So probably the best thing that could happen for them, for Crocs at least, is Hey Dude to really take off, right? For them to ramp that up, up that distribution, get those distribution channels going, and then I think the market would be like, oh crap, they were right. Okay, never mind. Good job, guys. And you'd probably see a lot more of that premium applied potentially to the company. So
yeah, that's just my humble opinion. We'll see how it works out.
Do you guys have any thoughts on Nike?
Ooh,
I haven't really watched Nike, honestly. What's the ticker?
Bacon and me talked about it 2 weeks ago.
Yeah, we did. It was Steve, it's a painful listen to as far as earnings calls, and it's not like that they're boring or dull. It's just I don't know. Dan, what would you say? Because we both experienced pain listening to it.
It's just a bunch of like woke nonsense. Like 20% of the call was just them spouting about the athletes that they sponsor.
Yeah.
Which was like, I don't care. I mean, we really don't. But they took what it was like. They took actions to fight the huge inventory gluttony that they had built up.
Yeah.
And they're getting through that now. So they deserve to get clapped a little bit. The stock price, I don't know, like the brand. Nobody's gonna say like I don't think this is one of those brands I wouldn't worry about going out of fad, like Lululemon or Crocs. You could probably have that worry. Nike's always at the top of like brand recognition for clothing. The surveys you see, but. My biggest problem, if I remember this from when we looked at earnings, was just like there's really not much growth anymore. Like you're not getting growth with Nike. I think they grow at like 1 or 2% year on year. The year on year revenue was like 1% growth last quarter, and it's like I guess they can improve margins. I mean, it's not a very exciting business, honestly.
Yeah, I agree.
It's kind of. Go ahead, Bacon.
No, I was just gonna say, just right price, maybe, but
I see. I have a hard time because I'm like, even at the right price, I feel like they just don't have like the quantitative aspects of their fundamentals aren't where like I would like to be in a company. You know what I mean?
I remember
like they don't have really good like bottom line margins. Their gross margins are meh. Like they have a really good brand, but like is that gonna ever translate to actually like a good amount of margin expansion on the bottom line? I don't know if the market would really ever apply more of a premium than it has in the past. So like if I'm looking at this, I'm probably looking for, some growth on the top line going forward, but maybe like more of a margin recovery and expansion story, at least from the numbers. But honestly, I haven't really like looked into the company at all.
What was concerning, like, so yeah, they had growth. I think it was in the Middle East segment. So some of the not America, like I think it was Middle East or Africa, they had impressive growth. But then I remember their shoe sales in the US were down like 6 or 7% last quarter. And it's like, I can understand there's some competition. Now, Decker has done really well last year.
Yeah.
I don't know, On Brands, and I don't know. It's a tough business.
That is very, very fair point. It is a tough business.
I would be like, they're a shoe company. I would be terrified to see their shoe sales in the US are down, to feel like this is a good, unless you feel like that's temporary, I should say. But
yeah, that's actually like another interesting point is that if you're, I feel like I wouldn't be surprised if they were seeing like US weakness, even if they're having overall growth, right? But US was weakening, then like the market might be applying some type of discount to the growth that they're seeing from other like non-US markets. Yeah, I don't know. I'm not super comfortable in this industry, I would say. And it doesn't scream like super cheap to me.
No, right now, no.
Just on first glance, it's not like, oh, this thing is like just dirt cheap, right?
No, it's like premium's been eroded a little. But...
It's like, all right, like yeah, it's premium's been eroded, but like their margins have kind of been in decline. They're kind of trading about in line with historical yield multiples, but they have like margin compression over the last couple of years. So really, I feel like there's not like a ton of ways for them to, I don't know, really perform well as a stock. Like there's one avenue, right? And it's like continued growth with margin expansion and multiple what do you call it? Jeez, like multiple stability, you know, basically.
Like for something this slow growing, I would want a bigger discount than I would normally.
Yeah.
Whatever you want to call it, margin safety. I would want
pretty
big.
Because like let's say that they were, you know, spitting out a net income yield of like 10% or something like that. Well, then they can like force that money into buybacks. And a lot of their EPS growth can just be a direct result from buybacks. And they have another lever to pull there. Doesn't really seem like that's where they are right now. And they're going to have a lot of drag from the dividend that they're paying out. So they have a 1.35% dividend. And that's going to be coming from your, you know, 3.37% net yield. So like, I don't know. Nothing about it to me screams like, oh, interesting. I would have to have like a really good understanding of the industry and be like, oh, because of XYZ reasons, they're going to grow at a way faster pace, and those margins are going to expand like really, really well going over the next like 5 years. I don't have enough knowledge to be able to say that's going to happen or not happen.
Yep. There we go. So
yeah, you're welcome, man. Of course. Yep. It's fun to look at stuff like this, and like obviously none of this is financial advice. We're just strangers on the internet, but it is interesting to like, you know, just breeze through things and like talk about it, see where people are coming from.
Yeah.
Triple chocolate, bearish Hershey's.
Oh boy, what has Hershey's been up to?
That's what I'm talking. I saw that comment and I was like, oh, what's Hershey's been doing? That's common.
I mean, Nike's not a different, kind of like Hershey's, right? It has
exactly.
The valuations aren't that different actually until there was a narrative change with Hershey. Like the same thing could happen at Nike to some degree.
I love how that wasn't even in reference to Hershey. It was like Dex is talking about baking cookies and he's like triple chocolate. And I'm like Hershey's. Hershey stock. Bullish. What type of chocolate are you using, Dex? Because I mean that will either make or break our thesis on Hershey.
Oh no. I mean, credit to them though; they did hit all-time highs last year. But yeah, it's been a noticeable fall if you top ticked it. My condolences if you did.
Yeah, I mean, honestly, it's kind of trading historically in line.
Yeah.
5-year averages is kind of historically right in line. So like, if Hershey's is something that you were interested in, you know, maybe. I think right now you're probably looking at about fair value off of first really initial glance. So let's see. But I mean, wooden spoon premium cookie dough. All right.
Yeah, the losses with Tootsie Roll from like last year's top ticks to where it is right now, it's comparable. So like obviously, you know, if we were talking about like just brand name quality, I think a lot of people would probably say, I'd pick Hershey's over Tootsie Roll, but
brand name is all that matters, right? That's why Tattooed Chef did so well.
Oof. There goes the moving bus. Certain someone got thrown under it.
But I mean, yeah, it is interesting because like I think there are times where a really strong brand goes through like a we'll say some rough waters, right?
Yeah.
And it could lead to potentially like a really good opportunity. But it's really depending on where that brand is going and how you think where they're going is going to really affect their bottom line financials. And, you know, is the market going to reward that? And that brings us directly into Disney.
Good old Disney.
Because I think like the reason I bought Disney was basically that, right? I was like, okay, well, you know what? I think they're going to be able to turn their streaming platform into a more profitable state. A lot of the drag on their like bottom line income is going to eventually potentially turn into a tailwind from the efficiencies that they gain in streaming. It is a really interesting streaming player. I like the different aspects or the different like segments of their business. And if they do things correctly, right? If they play it right, it's a very, very, very strong brand, right? So, you know, if they really turn things in the direction that I believe they are capable of, I think the market would really reward that. But we'll see. We'll see. They're
I think
also
we're
not
finally through the last of the woke movies before the pivot. So I was looking at this calendar, and I think we're through. So hopefully the movies get better at this point.
Here's
the Marvels, I think, might have been pretty much the end of the disaster of Disney movies so now they've said that they're going to pivot, because like the Marvels was from COVID. Even the development of that movie was during like the worst of COVID. Actually, that's why they've actually kind of been saying that's why it kind of looked like it sucked, because like the Disney management wasn't on set to I don't know, influence the direction of the movie. So
yeah.
I will be out before the next Star Wars movie. I'll tell you that. I don't want any part of whatever that Rey Skywalker shit is.
Yeah,
I will be out before that. But
you're not. You gotta be a buy and hold investor, man. You gotta hold it forever.
Disney, of all the things to hold forever.
Nah, no thanks.
Well, like, I mean, there's going to be pricing. They're going to be able to, if they're cutting spending on Disney Plus, they're raising prices.
Yep.
I think they do have some pricing power now because the players are on the field, right? And there's not that many actual streaming companies. There's less than we thought, because Paramount, who knows what Paramount's going to do?
Oh, dear God. Yeah.
They're going to barely flounder around. But
I mean, they'll either flounder around or they'll get bought up, I think, you know.
I mean, they don't really have much. I mean, the movie rights are worth something.
Oh, yeah.
I've been watching a ton of Paramount because of one thing.
What, Yellowstone?
And that's like, no, like our like, you know, random show that we'll just turn on and watch through the old seasons is Survivor.
Oh yeah.
So we'll just like, oh, it's on Paramount. Yeah, that's right. We'll just like watch old seasons of Survivor.
I like the new Star Trek, some of it, but it's not the same anymore.
Yeah. That one's another franchise that's gone through some hard times.
But Disney, man, if Disney just like, they do the CapEx in the parks, the demand is there.
Yes,
they need that's going to be a big hit. Like, people are so focused on the movies, and it's like, well, more to this company, and the thesis of the turnaround is not even about the damn movies. Honestly, it's beyond that.
It's way beyond that. It's one piece of the puzzle, but like, I'm surprised more people that like the people that were like really interested in cruise ships, like cruise lines, like where are they right now? Because Disney has a great cruise business.
Yeah.
Right. Like parks and cruise is awesome. I think if anything, streaming has really held them back.
You don't say.
But I think that, like, I don't know, long term, I think streaming is a good play for them. I really do.
It can work out. It can.
They have a new app so they're going to cut to one app, I think, this spring. So that's going to save them money. They've cut lots of costs at ESPN. So, like, you know, even though revenue's not growing, they're more profitable enterprise. They have ESPN bets now.
Yep.
So like, I remember during COVID, a lot of the cruise ships that were being built, I think they just canceled their orders. Like, Disney went in and bought some of those ships at discounted rates. So it's hard to understand, though, because they don't separate the cruise business in their financials. So all you do is get snippets of this news on your own to see, oh, there was a Norwegian boat that was being built. Now Disney bought it because Norwegian couldn't do it or something like that. But they're gonna have package deals now. So like the Disney vacation people now, I've seen a few of them do this where they do like 3 days at the park and then they'll do 3 days on a boat.
Yep.
As a new type of Disney experience. So like that stuff, they can add more cruises and more options with that.
Yeah.
More maybe a sandal style resort or more of those. They have resorts. Let's play already.
Gil, I always use Fabio as clickbait. For sure. No. No, it's so this is an open invitation to the group of 5 people. Basically me, Bacon, Dan, Fabio, and Andrew.
Yes.
It's just depending on our schedules of who can pop on and hang out during the hours. So that's why I keep the thumbnail the same. Obviously sometimes, people are not available. I will be here obviously because, I kind of have to be, it's my channel. So my apologies that you're stuck with me, instead of Fabio. I mean, I would rather, listen to Fabio too, but, hey,
we work with what we got.
We work with what we got.
Yeah. Some of us don't have Bloomberg terminals.
Yeah, come on. I mean, hey, I own Meta though. Does that count?
I would say it does, because that's P&L right there.
P&L.
Yeah.
Oh man. So okay, random question for you guys. If you had to buy either Hershey's or let's say, well, I feel like that's too easy of one. I was gonna say Hershey's or Apple. I mean, you'd buy Apple for sure.
Yeah.
I think.
Yeah, I probably would.
I almost said Hershey's or Bonds, but because I feel like it's like like that's kind of what you're getting.
What time frame? Like how many years for maturity on the bonds?
Oh, bond maturity.
Yeah, bond maturity. Who's the issuer also?
I mean, I do 5-year evaluations, so let's just say 5 years. Everything's 5 years.
Okay, 5 years. 5 years. Hold Hershey's right now, or hold a bond, U.S. bond, federal.
Yeah, sure, you can do that.
Okay. All right. So federal government, U.S. federal government. Yeah.
Yeah. Let's just say like 5-year like risk-free rate right around like what 5% annum, something like that. I think it is
5-year treasury. Yeah. What?
I'd probably buy Hershey's actually in that case.
I
think bond rates are going to go down, and Hershey's at an interesting now. I mean,
it's not bad, but see, that's the thing, Dan. If bond rates go down, the value of your bond goes up, right? So it's potentially like you would just see the appreciation faster in the bond from the decrease in interest rates.
Bonds, for God's sake.
Yeah.
Buying bonds. What's a bond?
But like Hershey's costs have gone up because like sugar, cocoa beans, stuff like that, and honestly, climate change, because a lot of South America's in drought. I find it hard to believe some of that won't be reduced at some point.
Yeah.
Or
it is kind of interesting,
the new economy, basically. So
yeah. What I was thinking and what I was kind of getting at is I almost like, in a way, I almost view Hershey as like an inflation protected like bond. Like that's like they're gonna grow with inflation, and as long as their margins don't get hosed, you're probably in for like, okay, yeah, you're gonna get your like 8% or something like that, and be good.
Yeah, the current CEO is also exec chair of the board, but we are pretty confident that it's the Hershey Family Trust that really runs the show in some level. Maybe I'm not there, so I wouldn't know. But You know what? Just because of macro, for Hershey's for 5 years.
Let's go.
Yeah.
Chocolate to the moon.
Yeah, at today's current price, like, yeah, I wouldn't be happy. Like, it's not like, no brainer, but yeah, like,
I don't know, man. Mr. Beast is gonna kill them.
Oh yeah, and Ozempic, or not Ozempic, GLP.
That's what I was like. That's why I keep on, like, I don't know, keeping Hershey's on my radar, because I'm like, if it can get negative enough, I will totally buy it.
Oh
right?
yeah,
But
yeah.
like right now, I'm like, okay, fair value, but it's nothing like super interesting. But man, you drop it another like 30%, I'm like, okay, like, let's go. But all right, hey guys, if you have questions, hit us up in the chat. I think we're gonna break here in about 5 minutes or so. And Dan, are we set? Are we set for round 2?
Oh yes.
Okay.
I think
so if you're in this live stream, we can just pop over to Dan's channel.
Yeah.
And we're gonna do a follow-up live stream, because, like, why the hell not? So, and Dan, what are we gonna be talking about?
Exciting topic, retirement.
Hey.
Oh,
You're ready for people.
Are we gonna talk about fire?
Grr. Fire.
Fire.
Grr.
Financial
Oh,
independence.
No, we'll talk. Like, I offered 5 options for retirement accounts. Jesse is a master retire king or something.
I don't know.
We'll find out what he thinks.
Uh,
We find out his whole retirement account is cash.
Yeah,
It's been all a lie.
It's all crypto. No, I'm kidding.
It could be soon. That's the dream of, like, these. Oh my god, I can't. Don't even get into that.
Don't
Crypto
even.
mutual funds in your retirement. God help us all. But
How many times has Jesse retired? 0, but I get tired frequently, so that's kind of works.
I retire
for I retire for the day at night, and I sleep. It's wonderful. You should try it sometime. No, I hope Dan didn't get shadow banned. That would suck.
I threw up
Dan Weston channel.
the
Did
link.
Dan get shadow banned? Can't find your channel anymore.
Yeah, I threw up some links and some other stuff. Hopefully,
it's just Dan Weston. I mean, it's not dividend, because it didn't work.
Dividends.
It didn't work. The spelling screwed with the algorithm or something.
Yeah.
Everybody was like, "What the hell is a dividend?"
Yeah.
YouTube
comment from a creator. Don't make your channel not spelled correctly.
Yeah.
No, seriously. Yeah, don't misspell words in it, because it won't work.
Yeah, that is weird.
What you should do is you should have a dividend merch line, right? Like t-shirts that, like, got dividends. Coffee mug.
I love a delicious dividend. It's like free money raining from the gods.
You have, like, the monthly dividend line, the quarterly dividend line, the special dividend line.
I mean,
I still need
really
to do
changed.
some Trash Panda merch, man. I still need to do some Trash Panda merch.
People think they're going to convert me. I get a question every once in a while. They're like, "So do you still don't buy long-term investments that aren't paying dividends?" I'm like, "Yeah, still." So
still don't do it.
I mean, come on.
All right.
What's the point of holding? What are you going to hold something without dividend forever?
Yeah, man. Just
worth nothing.
Raking those capital gains, baby. But okay, guys, we will see you over at Dan Weston's channel for some retirement investing and account talk. So have a great one. Have a good week. Stay safe out there, and we'll catch you on the next one.